Just a standard risk disclosure before today's video. I'm not a financial advisor or trading expert. I'm simply a trader who likes sharing a bit of what I know. Trade at your own risk. I hope you enjoyed the series. Hey, welcome back to my fourth video in a series I'm calling Back to the Basics, where we'll work on covering all of the basic fundamentals needed to start trading futures. From beginning to end, I want these videos to be straight and to the point, focusing on all areas of knowledge needed to start taking trades so that you can build that confidence within yourselves. In the last video, we talked about some of the basics in learning to read a chart. In today's video, I want to focus on talking about moving averages and how they can help us in our trades. Now these colorful lines I have three different colors here. These are called exponential moving averages, and they each have individual values. This EMA here in dark blue is a 21 bar moving average. What this means is that, for example, in this moment in time, the past 21 bars from this point, these candlestick bars, have been moving in a bullish direction, a positive direction. That's a 21 EMA. The 9 EMA here in cyan means the past 9 bars starting from this point have been moving in a bullish or positive direction. This 200 EMA down here in magenta is indicating in the past 200 candlestick bars that have formed with prices above this 200 EMA, they've been signifying that they've been moving in a bullish or positive direction. So now how can we use these exponential moving averages to help us take trades? Well, if prices are holding above the 21 EMA, it's safe to say that prices are moving in a bullish direction. And if prices start falling and start trending below this 21 EMA, it's safe to assume that prices are in a downtrend. Now, we specifically use the 21 EMA for that. As a result, this 21 EMA kind of gives us an idea of what's going on in a mid-level time frame, looking at the past 21 bars. For the 9 EMA, we're really focusing on a smaller part of the chart, only the past 9 bars. So for example, if we look at what prices are doing right here, the past 9 bars from this point are indicating bearish movement, bearish direction. You can see prices are pushing below this 9 EMA, so that's signifying that prices are pushing in a bearish direction. Prices are additionally below this 21 EMA. Prices are pushing in a bearish direction. And you can see as prices continue to move here, they'll continue to push down. Now I have the 200 EMA as more of a macro level, lets us know what's going on the past 200 bars. And if we really zoom out here, you can kind of get a better idea of what prices are doing. So prices pushed below this 200 EMA. And if prices are below this 200 EMA, that's signifying prices are pushing down in a bearish direction. Prices are pushing down. It can help give me an idea of what prices are doing on a bigger level. So that's the reason I have 3 exponential moving averages. I've got one for macro level, I've got one for kind of a mid level, and then one for more of a micro level, kind of looking to see exactly what prices are doing in a smaller point in time. Now in the next video, we'll talk about identifying trends, support, resistance levels. So we can definitely get into more of that terminology later. But you can see how prices react as they hold this 9 EMA. You can see how prices hold as they come up to this 21 EMA before pushing down. And additionally, you can kind of see what's happening as prices come down to this 200 EMA, somewhat respecting it before bouncing off this 200 EMA and continuing upwards. Now, markets don't just move up and they don't just move down. At times, prices can move sideways. You can see that a little bit in this area where prices aren't necessarily choosing a specific direction to go. Prices are coming up and then down, and then up, and then down, and back up. Prices are kind of moving sideways up here, kind of up, down, a little bit more sideways action right here, and more price action moving sideways here. Now, if prices are generally trending above this EMA, that signifies an uptrend. And if they're pushing down below the EMA, they're signifying a downtrend. But what happens when bars are stacking up and down and the EMA becomes flat? Notice how flat this 21 and 9 EMA are. What that's telling us is that the market is not moving in a bullish or bearish direction. Prices are moving sideways between two price levels, the price level up here and the price level down here. And again, we'll talk about that more in the next video. We'll be talking about trading ranges and trend lines. But just understand that these exponential moving averages give us an idea of direction of the market. Now you can obviously customize these values to whatever you want them to be. I've been used to and I have success using 21, 9, and 200 EMA, but there are people that incorporate maybe a 50 EMA, the last 50 bars. And just understand it's the same with any market you're looking at. If you're looking for moving averages in the stock market, if prices are trending above that moving average, then most likely that's signifying that prices are going up. And if prices are going below this moving average, prices are going down. It's the same with pretty much every other market. That's going to be it for today's video though, and talking about moving averages. In the next video, we'll take it a step further, start drawing trend lines and channels, and marking up our charts so we have a better idea of how the markets are moving. If you like this video, please leave a like, subscribe to the channel, turn on post notifications so you know exactly when I post this content, and leave a comment down below. Let me know, do you like using moving averages? Do you not? Why or why not? Is this the first time you're hearing about moving averages? I'd love to hear any and all comments down below. That's going to be it for today's video. Thanks for watching.